US regulators have been allowed to inspect the work of auditors in China for the first time, easing the threat that about 200 Chinese companies could be delisted from the various US stock exchanges. The announcement came yesterday, the 15th of December 2022, and it represents a breakthrough after a standoff between Beijing and Washington. Washington had argued that shoddy accounting audit contributed to a series of accounting frauds at US-listed Chinese companies. Groups including Alibaba, JD.com, and Baidu were on course to be delisted from 2024 under US legislation that banned trading in stocks of companies that did not have their audits inspected by the Public Company Accounting Oversight Board, PCAOB. China agreed in August to let the PCAOB examine papers from Chinese auditors, including the local affiliates of the big four global accounting firms, but the agency had signaled that it was skeptical about the level of access it would receive. The PCAOB was set up to inspect all accounting firms that audit US-listed companies, regardless of where they are based. As a matter of fact, if you're going to list your company on or if you're going to take your company public in the US, your auditor has to be a firm that is also overseen by the PCAOB. If you don't have it, the SEC will not complete the review of your request. Erica Williams, PCAOB chair, said this is the beginning of their work, not the end. This should not be misconstrued as a clean bill of health for firms in mainland China and Hong Kong. Inspectors found numerous potential deficiencies in the audit work in China, she said, since firms had not previously been held to US standards. Some could warrant enforcement, she added. Although inspectors have not yet been allowed into mainland China, a team spent 9 weeks in Hong Kong examining audits conducted by the mainland affiliate of KBMG and a local affiliate of PWC. The audits inspected included those of state-owned enterprises and companies in other sensitive industries, the PCAOB indicated. Beijing had not resisted US audit inspectors for years, or rather they had resisted US audit inspectors for years over fears they would gain access to sensitive data. In the run-up to the August deal with the PCAOB, several state-owned groups, including oil producers PetroChina and Sinopec, abandoned US listings. PCAOB said Chinese authorities had allowed access to all documentation without redacting information, and documents were able to be transferred to the US. Their teams are already making plans to continue inspections in 2023 and beyond, according to her. Okay, so see what you make of all of these things. Audit deal between China and the PCAOB eases risk of US delisting. Thank you very much for watching this video.